Hello everyone out there in tax land, and the tax man here. Listen, taxes don't need to be hard. Here we take complex tax subjects and we drill them down to make them easy enough for the average person to understand, average person to benefit, and average person to save money. And today we're going to be talking about the 3 biggest mistakes I see folks make when negotiating back tax resolutions with the IRS. You're not going to want to miss this. Now, the first and biggest mistake I see taxpayers make is not opening up their IRS mail. I've had more clients than I can count come into my office and dump on my desk a batch of unopened IRS letters, and sometimes these things are from years in the past. And while the average IRS letter may not read like a young adult novel, maybe a little bit more difficult than your average piece of literature, the IRS does a pretty good job of stating exactly what tax year or years are a problem, exactly what the IRS's problem is with those tax years, exactly what they need from you, and exactly how long you have to respond. So if you can just read the letters and in general follow the instructions, you're going to avoid a lot of problems with the IRS and avoid one of the biggest mistakes. Now, the number 2 and 3 biggest mistakes I see taxpayers make all revolve around the financial statement. If you are trying to negotiate for one of the IRS's better resolution programs, a hardship-based payment plan, or an offer in compromise settlement, the IRS is going to require you to file a financial statement, either a 433A or a 433F. And here are the 2 biggest mistakes I see taxpayers make on those forms. Financial statement mistake number 1, overvaluing assets like your home or car. See, on these financial statements, the IRS requires you to list all of the most expensive things that you own, like your home or your car. And while many people are very attached to these items and might be tempted to overvalue them, the truth is that they're probably worth a lot less than you think. And you definitely don't want to overvalue them, because if you have equity in these assets, the IRS is going to make you either sell them and take that equity to pay them before they'll agree to a resolution, or they'll make you pay an amount equal to that equity before they will move forward with the resolution. So on these forms, the absolute best valuation to make is one that's still reasonable, but is also as low as possible. You got to find that right intersection of as low as possible, but still reasonable. And you'll know you've hit the valuation just right if you give it to the IRS, they look at it and come back at you with, isn't the valuation for this car a bit low? And then you shoot back with, well, if it's so low, then maybe you'd like to buy it. If it's valued so low, if it's such a great deal, we will sell it to you right now. And if they kind of roll their eyes and mumble and then move on to the next question, you know you've priced it just right. The final mistake that I see taxpayers make when negotiating with the IRS, filling out these financial statements, is not paying attention to the strategic use of timing when it comes to calculating their income. You see, on these financial statements, IRS wants to know the value of all the stuff that you own, and they also want to know how much money you make. For many people, that number might be the same each month, but for far more, it changes. Maybe it's the busy season. Maybe it's the slow season. You want to find the right time period of income to present to the IRS that's going to make your income as low as possible. Because the lower the income figure that the IRS accepts, the better your chances for a good resolution. Let me give you an example. Let's say it's your slow season and your last check was lower than your average, and the IRS is asking for verification of your income. You want to definitely submit that check over. Say, hey, IRS, this is what I just got. This is the most accurate way of calculating my income. Here you go. If, on the other hand, it's your busy season and your last check was much higher than your average, when you submit that to the IRS, you got to say, hey, IRS, this is way more than I normally make. Make sure you're using the year-to-date figure, which captures both my slow season and my busy season, averages out my income. That way you're going to drive your income figure lower, and it's going to give you a better resolution. So there you have it. The 3 biggest mistakes that I see taxpayers make when negotiating with the IRS. Hopefully this video has been helpful. If you watch this video and think that maybe this process is not your thing, you should consider hiring an expert like me and my team. If you do that, we do all this work for you. We are professional IRS mistake avoiders. We make sure that all the asset valuations are spot on. We make sure that we're choosing the best possible time frame to calculate your income, and we'll always read your IRS mail. So give us a call, 1-800-424-8332. Or if you're a Spanish speaker, we'd love to hear from you at 888-523-6606. Ladies and gentlemen, I am Dan, the Tax Man. I hope you've enjoyed this video. If you like what you saw, give us a like, give us a subscribe. Make sure you're hitting that notification button so you know when all of the latest videos are posted. If you've got a question, leave it in the comments below, and I will see you next time.